Hey guys, Chris from Appropriation here, and in this video, I'm going to show you the solution for question 6 from the Jan 2012 PoA Paper 2. If you want to see the solutions for the other questions on this paper, I'm going to put a card up there and a link in the description below, so be sure to check those out as well. And with that said, let's get into the question. Okay, so it says that the following is the trial balance of Flavor Fruit Limited as at the 31st of December 2010. So we are given a trial balance here. We have a debit column and a credit column. So this starts us off with ordinary and preference shares. Ordinary shares at $1 each. The total dollar value is $75,000. So if they're $1 each and the total number of shares, the total value of shares is 75,000, it implies you have 75,000 shares because 75,000 by 1 is 75,000. Similarly, for the 5% preference shares at $5 each, the dollar value of all the shares is 100,000, which means that you've issued 20,000 preference shares because 20,000 by 5 is 100,000. The 5%, by the way, is the dividend rate. Now, what else do we have? We have share premium and retained earnings. So remember, share premium is the extra money collected above the par value of the shares when you issue the shares. Retained earnings, so that's the extra profit left over after all appropriations. Now, we have a couple of interesting items here. We have gross profit and closing inventory. So normally we don't see gross profit in a trial balance. Normally we have the sales and the opening stock, purchases, returns out, carriage inwards. And then even the closing stock, closing inventory is normally given to us in the additional information, which means that this trial balance is after the gross profit has been calculated. So you're gonna see those two items inside of here and not the regular items. Okay, continuing down from there, we have accounts receivable, which is an asset, and assets have debit balances, and accounts payable, which is a liability, and liabilities have credit balances. Then we have fixed assets at cost. So of course, this was an older paper, so they had not yet started using the terminology we use today, non-current assets. So assets again have debit balances. The provision for depreciation on the non-current assets has a credit balance because remember, depreciation represents the fall or decrease in the value of an asset. And if assets have debit balances, the decrease in value will have to be represented by a credit balance to offset or decrease the debit balance. Next, we have bad debts and provision for bad debts. So bad debts is an actual expense which has a debit balance. The provision for bad debts, much like the provision for depreciation, is a contra asset. Its function is to reduce the debtors or the receivables balance in the balance sheet in keeping with the prudence concept. And if its function is to reduce an asset balance, debtors or receivables, and debtors or receivables has a debit balance, the contra asset must have a credit balance. Then we're seeing some other stuff down here. Wages and salaries, rent and rates, motor expenses, building repairs, all expenses, all have credit balances. Commission revenue, okay, so that's a revenue item which has a credit balance. And the last item is office expenses. And we just said expenses have debit balances. Let's take a look at the additional information, shall we? So we have just two items of additional information. The first item says that the company provides for depreciation on fixed assets, non-current assets, at 5% of cost. So that's a straight line method. And then it also says, that the company maintains a provision for bad debts of 5% of year-end account receivable. Okay, so we're going to have to double check that. Now, the first thing that they want us to do is to prepare the income statement for Flavor Fruit Limited for the year ending 31st December 2010. Okay, so of course, as you know, as I always mention, and if you've watched most of my videos, always head up your statements properly. The name of the entity, the name of the statement you're preparing, and the period to which it applies. So the first thing we're going to put here is actually the gross profit. So I know most of you are accustomed with starting your income statements with sales and then subtracting returns inwards if that's there, but neither of those items are inside of this trial balance. As a matter of fact, like I said, the fact that we have gross profit as a term in the trial balance means that the entire trading section has already been done for us. So that $147,500 figure is actually going to be the first item in our income statement. Now, normally we might jump to subtracting expenses, but don't forget, there was a commission revenue figure, and we have to add any other revenue to gross profit before we deduct expenses. So the 147.5 plus the 26 gives us 151, from which we are going to minus the expenses. Okay, so let's go to the trial balance. So in terms of items that are expenses, the first thing I'm seeing is the, well, reference to depreciation stuff. So normally I leave that for last. I just decided to include it first here. So the cost of the non-current assets is $440,000. If you remember, and let's take a look at it, the note down here told us that the company provides for depreciation on non-current assets at 5% of cost. So all we have to do to find the depreciation figure is multiply 5% by the 440, and that's going to give us $220,000. The next item is the bad debts item. So the bad debts item is put as it is, $800. That's the expense figure for bad debts. We're going to put that there. And then we have the provision for bad debts figure of $500. So does that figure go in the income statement? No. We have to calculate the new provision and see if this provision increased or decreased. Now, it's always in your best interest to work that out before, because if your provision for bad debts decreased, you're going to have to add that to gross profit before you deduct expenses. So if you did this already, and then you go and you check your provision for bad debts and you realize that it was a decrease, you're going to have to pencil it in and scratch off this figure and all sorts of stuff, right? So spoiler alert, we actually have an increase in the provision for bad debts in this question. Let's check it out. So the additional information gave us this note here that said the company maintains a provision for bad debts of 5% of year-end accounts receivable. The accounts receivable at the year end is currently $14,000. 5% of which is $700. So the provision has to increase from the current value of $500 to $700. That's an increase of $200. And it is the increase in the provision that goes in the expense section in the income statement. You'll see it here, provision for bad debts. 5% of the $14,000 minus the $500. That's how we get the change in the provision. Okay, next we have, well, basically everything else here with the exception of commission revenue is an expense. Wages and salaries, rent and rates, motor expenses, building repairs, office expenses. So let's just populate those items as we go along. Wages and salaries, $26,000. Rent and rates, $15,000. Motor expenses, $6,500. Building repairs, $3,750. And office expenses, $23,000. Adding up all the expenses gives us a total for expenses of $97,250. And we're going to subtract that from the gross, well, the profit available there. And that's giving us a net profit before appropriation of $52,850. Let's take a look at part B, shall we? So they give us a bit of additional information here. We have 3 items. Let's take a read of each one. So it says that the company paid its preference share dividends. Okay, no problem. Then an ordinary dividend of 10 cents per share was paid to shareholders. And finally, we have a $15,000 was transferred to a general reserve. And we have to prepare the appropriation account for Flavor Fruit Limited for the year ending 31st December 2010 for 7 months. Okay, so the first thing we're going to do, of course, is head up our statement, name of the entity, name of the statement, and the period to which it applies. We're going to start with the net profit before appropriation, which we found above in the income statement, of $52,850, and we're going to subtract the appropriations. Now, I like to start with dividends, but honestly, there's no one right order to the appropriation items. The only exception I would say to that is I prefer to show my preference dividends before ordinary dividends, because preference shareholders are paid their dividends before ordinary shareholders. They are preferred in terms of dividends. Okay, now let's go up to the trial balance to see what's going on there. So it says here we have 5% preference shares at $5 each, valued at $100,000. The preference share dividend is simply the preference dividend rate multiplied by the total par value of the preference shares in issue. So we're just finding 5% of $100,000, which should give us $5,000. Next, we're going to go back down and take a look at the information about the ordinary share dividend. And it says here an ordinary dividend of 10 cents per share was paid to shareholders. 10 cents per share. How many shares do we have? Well, if we look at the information here in the trial balance, ordinary shares at $1 each, $75,000 worth. Remember, that was the first thing I talked about? If each share is $1 and the total value of all shares is $75,000, we have 75,000 shares. And each share is getting 10 cents. So we're going to multiply 75,000 shares by 10 cents a share, or $0.1. That's going to give us a $7,500 ordinary dividend. Now, you could have a subtotal for the dividends, but you don't have to. The last item that goes in the appropriation account, the last appropriation, is the $15,000 transfer to general reserve. And that's simply going to be a figure going there. And all we have to do is add up those two totals, well, the subtotal for dividends and the general reserve transfer, to get a total appropriation of $27,500, which when subtracted from the net profit before appropriation gives us $23,350. Well, that's the retained earnings for the year. And in the trial balance, don't forget, we have a retained earnings balance brought forward of $32,150. So we need to add that here. And that's now going to give us a retained earnings balance carried forward of $57,500. Now, earlier on in my accounting career / life or whatever, I used to add the retained earnings brought forward to the net profit before appropriation. But I've since kind of changed my preference, because I like to kind of show that you can take the profit for the year and make enough, well, use it to make your appropriation. So it's showing that your profit for the year is sufficient to make the appropriations required. So it's a bit of a comment on the current year's profitability, and you're not kind of obscuring it by including the retained earnings from previous years in the current year's retained earnings. Now, it's not to say that you cannot use the retained earnings to make distributions, because there will be some years where you won't make enough profit to do what you have to do. So it's always a good idea to have retained earnings to do so. Okay, let's take a look at the last part of the question. So the last part of the question is asking us to prepare the capital and reserves section of the Flavor Fruit Limited balance sheet. So let's, of course, head up properly. Flavor Fruit Limited, balance sheet extract. So I'm using the term balance sheet instead of statement of financial position just for now, as at December 31st, 2010. And of course, we're in the capital and reserve section. So we're going to start with the share capital. Now, the share capital figures, the par value figures, can be found as the first two items in the trial balance. Ordinary shares, 75,000, 5% preference shares, 100,000. So all we have to do is put those figures in. Ordinary shares, preference shares totaling 175,000. Now we put the reserves. So the first reserve I like to include is the share premium, which is $25,500. Now the retained earnings of $32,150, that was used above when we did the appropriation account in the previous part of the question. So we'll hold off on that figure for a second. So share premium is $25,500. Don't forget, we also had an appropriation, a transfer to the general reserve of $15,000. And the last figure in the appropriation account, the retained earnings carried forward, of $57,500 is included here. The subtotal for reserves will give us $98,000, which when added to the $175,000 above gives us a total value for total capital and reserves of $273,000. And that's it for this question. Okay guys, so there you have it. That's the solution for question 6 for the Jan 2012 POA Paper 2. If you have any questions about it, please feel free to leave them in the comment section below, and I'll get back to you when I have a chance. If you want to check out any more videos, I'm going to put some cards up here. Don't forget to subscribe, and be sure to check out my website where you'll find some free, useful POA handouts. Anyway guys, as per usual, thank you so much for watching. Take care of yourselves, and I'll see you next time. Bye.